Joining me now in studio is John Allison, Chairman and CEO of Unio Capital. And John, it is a pleasure to have you back with us.
A great pleasure to be back.
John, let's start off with that jobs number. The economy adding 313 jobs. Wages grew less than expected. Investors seem to like this balance. What's your take?
Well, I think they liked it for a good reason, and it's actually in some previous shows I've been on, we've emphasized the fact that this is a disinflationary world still, despite all the fears of inflation, because all workers, practically all workers, perhaps not lawyers, know that automation can take their jobs and therefore are less likely to demand more, and that's what you're seeing in a situation like this, more jobs, but wages not going up.
So how does this play into the Fed and it's looking at data when looking at raising rates?
I think it moderates whatever the Fed would otherwise do. We think they're going to raise rates, and we've been saying that for some time, but we think it'll moderate how high the rates go and how fast they go, precisely because this is the kind of disinflationary data point that intelligent people like the Fed governors take into account.
Are you still looking at 3 to 4 rate hikes this year?
Our view is 3 rate hikes, and I think it'll be, despite what they don't say, I think it'll be very data dependent.
All right. Well, let's talk about the geopolitical picture. Some developments with North Korea. Now granted, North Korea hasn't really been factored by investors in terms of the risk that's largely been ignored. But does the potentially positive development do anything for U.S. markets? We know we've seen Asian markets rise on this, like the Kospi. But do you see U.S. markets factoring this in?
No.
No. In a word, no.
The bottom line is that back in August, we wrote a paper on political risk, and we talked about North Korea. Basically, the history of political risk is if it affects the economy, then it will have an impact. If it doesn't affect the economy, it will not. North Korea has very little impact on the economy, whether it's a risk or whether let's say we have a wonderful love fest between Trump and the North Korean leader, that will also not affect the economy. So I don't think it'll have.
I guess it would only affect the economy in a worst case scenario when there's a war.
Yes.
That would be the only real way.
Yes, and if that happened, like when our paper, we said if, and this is a horrible thought, but if the whole of South Korea was wiped out by nuclear weapons, that would take $1.4 trillion out of a $75 trillion world economy. That is not serious, obviously very humanitarianly serious,
right.
But it wouldn't have really that much impact, even something as extreme as that. So,
John, what about tariffs? Because we've seen the markets react to that. We're hearing that the Trump administration is going to exempt Canada and Mexico. Investors like that. As I mentioned, German Chancellor Angela Merkel also wanting an exemption. Is this the trend you see happening? Cherry picking who gets the tariffs?
Yes, this is who's going to be our favorite country here. So I think Mr. Trump is in some respects smarter than he appears. This is a bad decision. It is recognized by everybody as not being good for economic growth. As a result of that, I think Mr. Trump will recognize that and is already backtracking. Will he backtrack more? I think he will. The more he recognizes a cost, the more he will backtrack on the thing. You
think that he thought this would be good for the economy going into it? And now has changed his mind, like with the departure of Gary Cohn, for example?
I think Mr. Trump has a history of thinking tariffs are good, but he also has a history of knowing when something is working and when something is not. And I think the recent evidence is this is not working, and I think he is reacting true to form, and that is not pushing something that is a bad decision.
Well, John, though, when you look at what's happening with China, there is an argument to be made that the president has a point. I mean, the trade deficit, the trade surplus ran over $375 billion last year. We even have Elon Musk backing the president, saying that there's a 25% import duty on American cars from China, and the U.S. only charges 2.5%. Is this perhaps not a negotiating tactic, a way to try and level the playing field a little, at least with China?
I think it is a negotiating tactic, and I'm speaking as an investor now. I'm not speaking, I don't forget my political views. This is an investor. I think that's true. I think, though, that start with Elon Musk, who's a very smart guy, and I'm a great admirer of his. I think he's got it all wrong. The reason there are 2% tariffs on Chinese cars is the Chinese don't sell any cars in the U.S., so therefore it's a meaningless number. And the reason that Chinese charge 25% tariffs is the U.S. doesn't export cars to China. They build them in China. So, for example, China's General Motors' biggest market, and that's the way you sell cars. So if Elon Musk wants to sell Teslas, he's going to have to build in China, and I think he's a smart enough guy that he will build in China.
All right. John, broadly speaking, what is your outlook? The S&P already gained from the correction that we saw. It's up about 4% year to date. What's your broad outlook?
So our broad outlook, going back to many times I've been on your show, is that we're generally bullish. We think the economy worldwide is in a synchronized recovery. Corporate profits are doing well, and overall the stock market is doing well and will continue to do well. But there's one risk that's getting bigger and bigger, and that is human intervention. People making bad decisions that end up unseating a very bad economy. So we hope that policymakers, whether it's the administration, whether it's the Fed, actually just stay cool and don't do too much, because if they don't, I think things will be okay.
Have the humans stay out of it. John, always nice to have you on the show. Thank you so much. John Allison.
Great to be here. Thanks.